Remember Yahoo, the internet company that peaked when flip phones were cool and Mark Zuckerberg was still a pimple-popping high school kid logging into America Online on Friday nights? I'm about to blow your mind. Yahoo might just be relevant again. It now has one of the most underrated AI investing tools, and almost nobody is using it. If you're a serious investor, you already know the pain. Earnings season hits saying you're buried in news releases and filings. Then there's the earnings call with the CFO who's more comfortable with spreadsheets than an audience. You grind out 60 minutes listening to them read the news release verbatim in that monotone senior management voice. But there's an AI tool sitting right inside Yahoo Finance. No prompting, no subscription, no account needed. It just replaced 3 hours of my due diligence with 10 minutes of scrolling, and I'm about to show you exactly how. Here's what we're covering today. First, why this Yahoo AI tool is actually more reliable than asking ChatGPT about stocks. And surprisingly, the reason has nothing to do with Yahoo. It involves Microsoft and Anthropic. Second, I'll walk you through the exact session I ran when a $200 billion capital expenditure announcement had the entire market spooked, and how it completely flipped my read on the situation. Third, the one question you should never ask this tool, no matter how tempting it is. Here's the reality if you're a serious retail investor. Your stocks move every single day on news, macro, and geopolitics. Then, every quarter, there's earnings season. If you actually do the work, you're reading the 10K, the press release, the full earnings call transcript. That's not optional, that's the job. But let's be honest, a 100-page filing or a 60-minute monotone CFO call eats your entire evening. Most people either skip it, which is dangerous, or they burn hours they'd rather spend with family. So what do they do instead? They fire up ChatGPT and start prompting. Big mistake. Here's why it fails. 1. ChatGPT is a language model trained on old static data. Ask it about last quarter's earnings right now, and you're probably getting stale info. 2. Hallucination risk. These models can invent numbers and make them sound believable. This is even more dangerous than some Reddit forum hot tip because it seems legit. 3. The prompting tax. You have to already know the perfect questions to ask. But if you already knew exactly what to look for, you wouldn't need AI in the first place. That's the trap most retail investors fall into. This is where Yahoo comes back into the picture. I've used Yahoo Finance for years, not because it was the best financial site, it wasn't, but because it was a fast way to get real-time quotes without logging into my brokerage. That's it. I hadn't thought about Yahoo as a company in probably 25 years. Then, in early January, I noticed something new on the site, Scout. I started playing around with it, and it was like a light bulb went off. Here's what Scout is. It's an AI layer built directly into Yahoo Finance. It collects real-time quotes, news releases, analyst ratings, earnings transcripts, and global financial news, and synthesizes all of it into clean summaries. No prompting necessary. It's already there, updated and embedded in the tickers you're already watching. And here's the first thing most people ask when I describe this. Wait, Yahoo? Isn't this just a dollar store AI? Fair enough, I had the exact same skepticism. So I looked under the hood before I trusted it with anything financial. Here's what I found. Scout isn't a Yahoo AI model. It's running Anthropic's Claude, the same model that Fortune 500 companies pay thousands of dollars a month to access through the API. And it's optimized specifically for complex financial logic. But the model is only one piece. Here's another thing that makes Scout different from just chatting with ChatGPT directly. First, real-time grounding. The AI refreshes every 10 minutes to incorporate new data. When a stock makes a big move on a no-news day, Scout already knows why. Compare that to a generic chatbot where your answer was shaped during language model training months ago. Second, hallucination prevention. Yahoo uses Microsoft's Bing API to cross-reference every AI output against authoritative web sources. So when Scout gives you a stat, it's not making it up, it's verified. And third, Yahoo's knowledge base. 30 years of search history, 500 million user profiles. That's proprietary data that ChatGPT can't replicate. So this isn't the dollar store version of AI. It's a purpose-built, finance-optimized intelligence layer on top of enterprise-grade infrastructure. That description sounds complicated, but it just means that it can do things that other models simply can't.
So, what does Scout actually provide when you open a ticker? The workflow is built around core outputs from every important event, like a significant price move, a news release, or an earnings call. These map directly to things any serious investor is actually looking when doing due diligence. For example, the summary tells you what happened. The outlook tells you what management is projecting. And the earnings call questions are where the real intelligence happens, because that's where analysts push back and where management gets pressed on the hard questions. Instead of spending 2 hours getting those insights manually, Scout provides it for you instantly. Let me show you exactly how that plays out in practice, because I have a real example. A position I started earlier this year had an earnings release that spooked the market big time. I had a fundamental question that I needed answered. Here's what happened. Earlier this year, I bought some Amazon. My thesis was simple. The stock was trading at multi-year low multiples at the same time the company was experiencing massive growth in its two highest margin business segments, AWS and advertising. The bet was that the market was underpricing the earnings power of those units. Then, earnings dropped, and the market did not like what it saw. Earnings were good, but the number that spooked everyone was $200 billion in planned capex for 2026. The stock sold off. And I had a decision to make. Is my thesis intact, or did I miss something? And here's what I needed. 3 sections: the summary, the outlook, and the Q&A notes. The summary confirmed the top-line numbers I already knew. AWS growth accelerating, advertising revenue up significantly, operating margins expanding. So far, my thesis still looks good. Now, the outlook is where it got interesting. This is management's forward guidance, and more importantly, the tone and conviction behind the CapEx story. And then the Q&A notes. This is where analysts ask the hard question everyone was thinking. What is this $200 billion in capital expenditure actually for, and when do you see the return on it? And what Scout surfaced from that exchange was clear. Management wasn't defensive about the number, they were confident. The capex is going into AI infrastructure and AWS capacity. They're confident that demand is outrunning supply, which means the constraint on revenue isn't sales, it's their ability to build fast enough. That's not a red flag, that's a company investing aggressively at the right moment in a cycle that's just getting started. 10 minutes and I came out more confident in the position than I was going in, and all the while the market was actively selling it off. Now, I want to be straight with you because I'm not here to sell you on anything. Scout is a genuinely useful tool, but it's not perfect. And if you're going to use it, you need to understand what it is and what it isn't. Think of it like a smart junior analyst. Talented, fast, good at summarizing and filtering, but still an analyst who occasionally takes shortcuts, misses nuance, or leaves something incomplete. Let's call this the lazy intern phenomenon. LLMs can sometimes cut corners on complex tasks. What does that mean for you? Don't treat any single AI output as the final word on anything important. If you're about to make a significant investment decision based on a specific claim, verify it against the source. The Q&A notes pointed me to a conclusion, but I spot-checked the actual transcript before I decided not to sell. Use Scout to get oriented quickly. Use it to know which questions to ask. Then verify what matters before you execute. Back to Amazon for a second. After going through Scout's earnings summary, I had 3 things I didn't have before. A clear picture of what actually happened in the quarter, management's conviction on the forward story, and the context behind the $200 billion capex decision that the market didn't like. The insight. Management's confidence in AWS ROI over the coming decade was what mattered to me the most. If they execute, that capex translates to record growth in their highest margin segment over the next several years. The market was selling on fear of the number. Scout helped me understand the story behind it. My verdict? Hold the line. Thesis validated. Now, I want to be very clear.
I'm not telling you to buy Amazon. I'm not your financial advisor. This is my thesis, applied to my position through my own judgment. Scout made me faster and better informed. The decision was still mine. So here's how I think about Scout. The AI's job is to do the heavy lifting. Let it go through the pages of filings so you don't have to. Let it summarize and filter the noise. Your job is the critical thinking. Things like thesis creation, judgment calls, and execution. That balance, AI doing the legwork, human making the call, is what successful investors should be using AI for. And the thing you should never ask Scout to do? Pick stocks. Don't go into Scout and ask it to tell you what to buy. That's not what it's for. An AI doesn't have any sense of risk tolerance or time horizon. It doesn't know your tax situation. Those are yours. Use it to do your due diligence better and faster. Use it to ask the questions you didn't know you should be asking. Use it to validate or disprove a thesis you already have. But the judgment stays with you. Think of it as your personal free junior analyst, not a magic wand, not a replacement for doing the work, a tool that makes the work faster and makes you more informed when you sit down to make a decision. So, the verdict. Yes, Yahoo actually built a genuinely useful AI investing tool. And before you say, come on, really? Give it a try. It's free, no account needed. Go to finance.yahoo.com, pull up any ticker you're watching, and scroll down to Scout. The goal of this channel is to help you do your own due diligence better. Scout fits that mission exactly. It's a tool that makes the work you're already doing more efficient and more informed. That's the edge. If you found this useful, subscribe. There's more coming on useful AI tools for retail investors.